Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a filing that shows a company growing its borrowing power, and we'll see if that is a sign of booming business or just a need to keep the lights on. Before we jump in, if you like getting the real story behind these corporate documents, make sure you are subscribed for more real time discussions, and to connect with other finance enthusiasts, join our Discord community, linked in the description below. California Resources Corporation, or C.R.C. as they're known by their stock ticker, has just put out a current report, essentially an update on significant events. For a company like this, which is involved in oil and gas, these updates can be pretty telling. The key date here is the 29th of October 2025. This is when the main event we're looking at happened. So, what is this big event? Well, it is about a change to their main loan agreement. Think of it like a company taking out a big loan to fund its operations or expansion plans. This agreement is called a credit agreement, and they've just done a significant update to it. This particular update is the 7th Amendment. That name might sound a bit dry, but it means they've made substantial changes to an already existing and very long loan contract. The important part is that this amendment effectively increases the amount of money they can borrow. This is where it gets interesting. C.R.C. has increased the total amount they can borrow under this credit facility from $1.15 billion to a whopping $1.45 billion. That is an extra $300 million they can now access. Why would a company do this? Typically, it is because they foresee a need for more capital. This could be for new projects to weather potential downturns, or perhaps to fund acquisitions. It directly signals their intent to have more financial flexibility or to embark on growth strategies. Another key piece of this 7th Amendment is that they've brought in new lenders. When a credit line gets larger, it often means more banks or financial institutions are joining the party, spreading the risk and providing the additional funds. This can be a positive sign indicating confidence from a wider group of lenders in the company's future. Just to provide some context, California Resources Corporation trades on the New York Stock Exchange under the ticker symbol C.R.C. This is the company whose financial health we're always keeping an eye on. This specific filing is all about this material agreement, which means it is a significant deal for the company. They've entered into this 7th Amendment to their credit agreement. The original agreement was from April 2023, and this amendment, effective the 29th of October 2025, is a pretty big revision. Under this section, they list the supporting documents, and most importantly for us, they filed the actual 7th Amendment itself as an exhibit. This is where all the nitty-gritty details are, although we're focusing on the headline news here. Now, let's look at what this all means. An increase in borrowing capacity by $300 million is a significant move. For C.R.C., an energy company operating in a cyclical industry having access to more capital is crucial. It could mean they're preparing for increased exploration and production activities, or perhaps making strategic investments. It could also mean they expect future revenues might not be enough to cover all expenses and investments, so they are securing funds now. Without seeing the actual financial statements from their latest earnings report, it is hard to say definitively if this is a proactive growth strategy or a more defensive measure to shore up finances. However, bringing in new lenders suggests a broader market acceptance of their creditworthiness. Looking at the broader picture, C.R.C. is in a sector that is sensitive to commodity prices and global demand. Having a larger credit line can provide a vital buffer against volatility. It means they can continue their operations, invest in maintaining or expanding production, and potentially take advantage of market opportunities even if their immediate cash flow is tight. It is like having a bigger safety net in terms of assessing strengths and weaknesses. The ability to secure such a significant increase in credit is a strength. It shows a level of trust from the financial community. However, the underlying necessity for this increased borrowing is a potential weakness to watch. Are they borrowing more because they see huge opportunities to invest and grow, or because they anticipate financial pressures? We'd need to see their recent financial performance and future outlook to make that call. A notable opportunity here is the flexibility this provides to capitalize on any favorable market shifts in oil and gas prices. A risk, of course, is that increased debt comes with increased interest payments and the obligation to repay, which can strain future earnings if operations do not perform as expected. My conclusion is that this move by C.R.C. to expand their credit facility by $300 million, bringing their total potential borrowing to $1.45 billion, is a significant development. It indicates a strategic move to secure substantial financial resources. While the exact reasons require further context from their financial reports, It provides them with greater operational and strategic flexibility. Investors should keep a close eye on how C.R.C deploys this additional capital and monitor their repayment ability in the coming periods. Alright, that is our quick decode of this California Resources Corporation filing. What is your take on this increased borrowing? Do you think it signals growth or something else? Drop your thoughts in the comments below. If this breakdown was helpful, please hit that like button and subscribe for more insights. And don't forget that Discord community link is in the description. Thanks for watching, and we'll see you in the next decode.